Everything up to speed here. I've got the streamers up and ready to go now. We are on YouTube. Another uh, rare streaming on YouTube today because we do have a special event, and I've got them up and ready to go. I'm not going to stream the FOMC through the YouTube channel because it'll create a long delay, but I did post the link if you want to watch that, so we can kind of watch that together. I will be a little quiet once they start talking, so I can kind of hear what's going on, and I'll throw in some colorful commentary when applicable. But other than that, I do want to make sure I can hear everything that Chair Powell is saying. And you can see the volatility is already starting to increase. We had what, a 60-cent move, and then an equally 60-cent upwards move here with this red and green candle. So things are already shaking and baking. And we're going to wait to see what's coming on here. I'm going to bring up the options chain and start figuring out where I'm going to go with. I plan on taking both long positions and short positions in terms of call writing and buying in anticipation after we get a good indication of where this market is going to go. Yeah. And look at that big. Definitely. Look at that big green candle right there. So it looks like there's definitely some buying going into the market. SPX is jumping up to 46.30 right there. And an equally red candle. Look at that red candle. Oh, holy moly. That is shaking and baking. Did they already post data, or is that just people taking bets off the table? Wow. All right, I need to bring up some data. Look at them. Hold on. Wow. What were we saying? Okay. Yeah, I'm looking myself, so keep that going. Keep that going. Okay. So they're doing 3 hikes in 2022, and they're anticipating a faster taper. All right, looks like I'm going to start rolling into some puts and CCSs if this keeps up. Look at that red candle. It's not getting bought up either. There's a little wick, but it's holding so far. Look at Tech. Tech has got a massive red candle. VIX is spiking up over. It broke through the trend finally, and even more increasing on the VIX. And that candle is filling out. And bam. Interesting action. Man, I look at like, wow. If you are playing some long positions right now, be careful because that big candle is going nuts. Look at that big buy up right there. I can't imagine what your 0DT premiums are looking at right now. Wow. Wow. Nutty stuff. All right, let me bring this up here. I want to make sure I'm monitoring comments on the YouTube. Yep. So if you are playing long positions, please be careful. And yeah, watch the language in the chat room, please. But yeah, look at that red candle here. So I'm going to start bringing up ideas for spreads and a long position. I'm going to let this thing shake out before I look in an enter position, a long position. I don't want to get smoked out, but I will start taking some spreads here. I'm thinking a call credit spread at the moment, and I'll be watch how this next candle form on the 3 minute. This candle is still holding. It's not wicking out all that much. Just a little bit of wick, but it's still holding the majority of its body. Watching Tech, still holding down. XLF, green bonds. The bonds are getting bought up here. And there goes the wick, finally getting a little bit longer. We'll see. I'm waiting for this candle to close to start making any big decisions. But then again, we've been waiting for a decision on rate hikes. When's it going to happen? People saying, oh, it's not going to happen until 2023. It's not going to happen until later. And now they've confirmed they're going to do it at least in 2022. So there is a big old greenie. So 26.32 there on the SPX. Big old green to match the red. So the red candle closed, and now we got the green overcoming and going up to 462. For sure, for sure. Volatility is definitely strong on this one. Big, big green here. So this thing went from all the way down to 46, 460.76 to 463.50. That's a $3 move in about 6 minutes. A lot of volatility here. VIX, big red on the VIX and still gapping down on the VIX. Man, that candle's getting even bigger. Look at that. Wow. Let's look at tech. Microsoft, big green here. Apple, big green on the Apple. Amazon, doing the same thing. So tech is definitely responding in a bullish manner here. Yeah, absolutely, absolutely. Watch for the decay of the zero DTE start to fall off, or start to pick up, I should say. They've been holding and actually increasing going into that event, and now that the IV is going to start to release, watch for the decay to start to pick up, especially if this price does start to flatten out a bit. But man, look at this move. That's a $4 move almost, a $4 move and increasing. Yeah, that was huge. 46.45 and increasing. Man, oh, look at that candle. That's one of the bigger candles I've seen in a long time. 46.5. Now we're going for a $5 move if it continues to climb through this R2. I think R2 is the big strong one. Obviously, these levels don't really hold up to news-driven events, but let's see if it does it on this one. Was it R2? Let's see. I've got R4. I'm sorry, R4 is the strong one today. Man, look at that, 464.53. All right, got a little red here on R2. Let's see how it reacts. Yeah, yep. All right, so we got this red off of R2. I want to watch everything else. XLF is still uptrending. Is there any of the X's that are showing any weakness at all? And trading V's being a little slow. XLK and Y have a red. V is holding. F has got a red. XLC has got a red. So let's see how this next candle starts to shake out. Thanks, Ray. Appreciate that. Yeah, that R2 held beautifully after that big jump. Never made money on both sides of a strangle. Good day. Nicely done. Nicely done. Don't hold that strangle too long, at least the losing leg too long, because you're going to start facing decay depending on what DTE you took on those things. Man, big old green candle. It's getting this red candle's getting wicked. Let's watch the Nas. Way up here. Way up here. Oh, follow on green still getting bought. 464. And SPX has got 46.48. But it got eaten up. All right, all right, all right. Should have bought 0DTE 747 calls. Yeah, should have, but hindsight's always 2020. Yeah, I've got calls pulled up ready to go. I know not to test the market, so I'm waiting for this thing to go, and we'll form out. Might even do if we do get confirmation on an upside, I'll start seeing if I could squeeze in a little bit of premium on a PCS, maybe even going in towards Friday if we're going to get this rally up into OPEX on Friday. Maybe doing a 17th expiration. Yeah, that there was a red on Nasdaq, but it got eaten up, and now it's green. So be careful if you're watching delayed data. Just be careful. Watching this R2, flipping back and forth. Yeah, so if you're noticing, like someone just made a comment that their 2-day DTE call is not printing. Well, you're getting a little bit of IV decay right now. VIX is just falling off down to 21. Another big green candle, follow-on candle through R2. Watching tech, still follow on. Yep, just make sure you're managing position sizes. This is not the time to be gambling on this stuff, so just be careful. Tech is liking the sound of all the stuff. We have another follow-on green candle here. 46.55. I'll be looking at the 46.65. Yeah, premiums are definitely cheaper already. So we're already facing a 54-point move on SPX, and it's climbing now. Now testing 46.60 with no end in sight. It's just buying up, buying up. That is a move and a half right there. Move and a half. VIX continue to fall. They went from 23.46 down to 21.37. Massive sell-off in the VIX. And watch this pivot right here. That 21.21 we're approaching. See if it gets a bounce there or if it continues to fall. Little wick there, right under R3. I think let me double check that again. A lot going on here. R4 is the big one, 466.76, which is up here. That is a move. That is a move. Little red here. Little red. We'll see. We'll see. Profit taking a rebound. We'll see. Right here we've got a very, very large move on a very, very quick time frame. So the Federal Reserve doubles its rate of tapering to $30 billion a month. Okay. ETH with a crazy move up, so a little Bitcoin's moving too. Yeah, that's a huge move. Huge move. Right under R3 as well. All right. Just definitely want to monitor tech. I just moved that. Didn't want to do that. Let's come up here. Microsoft is still beast mode. Apple's got a touch, so all of tech is still holding the top. Nvidia's nice and strong. Bonds are relatively flat given the circumstances. VIX is still coming down. Watch this 2120 area. TLT, the bonds coming off. Financials coming off as well. Big red candle on XLF. And tech is just still climbing. Consolidating 465.36. And looks like we're forming another leg up again. So tech has just beasted up again, formed new highs on tech. And we're going back to the 14th pre-market, yesterday's pre-market. VIX coming on down, approaching pivot. Let's see if it actually does respect that or just blows right through that. Why do these markets have large moves on FOMC meeting days? Occasionally it's nothing sandwich, but on moves like this, there's a lot of anticipation to the content of the FOMC. Sometimes it's just more of the same, but this particular FOMC, rate hikes is a big deal. That's the next key catalyst. For a while, it was taper, and then they got through taper, and now it's rate hikes. So when are they actually going to start hiking the rates? Especially as inflation starts to go rampant, and Omicron, all this stuff. When are they actually going to start affecting the economy with rate hikes? And there's a lot of anticipation going into today. And this is just the ramifications of that anticipation. The market's been very tight. Volatility's been hanging up. VIX has been over 20, actually topping out at 23, 15 today. So that's a lot of coiling. That's a lot of energy that's pent up. And this is just to release that energy. Everyone's waiting, sitting on the sidelines, and then we've got the news. They're not going to hike rates until at least 2022, and then bam, all this energy releases to the north. And you got a 50-point pump in SPX in minutes, and not giving anything back either. So a lot of sell-off here in XLF. The bonds aren't really moving appropriately as well in comparison to that. Coming on down 38.85, and we're just coiling here at 465. Apple's going nuts. Microsoft trying to go back. Apple's trying to hit 180. Apple's trying to get that 180 with that 3 trillion market cap. What is it? 183, 182 was the market cap number. Crazy, crazy stuff. Possible bull trap? I wouldn't go that far. I think they were just waiting for this indication that they weren't going to raise hikes, or I'm sorry, hike rates. And now that they've got that answer, there's a lot of buyers pouring into this to buy this. Not to mention we might have a little bit of short covering and popping up to 465. So. All right, let's see if they've gotten this thing started. A little bit of red coming down to R2 again. Just people taking profits off the table. All right, coming back down through R2. Still nothing yet. Still nothing yet. All right. All right, got a little red here, so coming on down. Now with premium still being somewhat elevated, once I find a good, warm and fuzzy about a position, now I'm going to start looking at entering and make a little money. Oh, we get an LRS here, a little bounce off the 8. What's tech? QQQ's got another big green candle forming. XLF, down but green. And there's SPY. Doesn't want to give it up yet. Doesn't want to give it up yet. Bonds are starting to bounce. Look at that. VIX almost popped at that pivot, almost onto it. What, about 10 cents off of that pivot? It bounced. So that's where the technical analysis on VIX works very well. Obviously, you can't do volume analysis on the VIX, but looking at certain pivots where the VIX likes to jump is a good indication. Look at that, almost down to that penny right there. I won't say that, but 10 cents off. I got a good bounce off that pivot, and now a little downside coming into SPY. You can still get $5 credit for 4610s right now if you think it's not going to go that low on some PCSs expiring today. Interesting action. Interesting action. All right, so we got 46.41 on the SPX. What's tech? Tech is starting to round over just a touch. Right there, SPY, giving more back. Giving more back. All right, so we got some red. There's that volatility trigger. Or that's not, it's the 46.43. So coming down below that volatility trigger again. It's exactly right. What's the market expectations versus what printed? It's exactly right. I learned that a long time ago. Once you learn to stop anticipating what the markets should do and start playing what the market will do, you can start to play a little smarter and make a little more money. Because right now, think, oh well, from all honest expectations, it's like, should we be at 46.35 on the SPY, or I'm sorry, the SPX? So you start hearing that we're going to start hiking interest rates, no matter if it's early 2020 or not. Look, what should we do? And then you start thinking about what should happen, what could happen, and it puts yourself in a bad spot. Nice red candles here. Tech coming on back down. 463.12 on the SPY. Market closes in an hour and a half, and there's still zero DTE premiums at $7 and $8 that are down at 46.10, which is below the day's low. Down here, actually, the morning's low. So, I mean, if you did want to take some chances on a good credit, you could. In terms of put and calls, I haven't taken a position yet. I'm waiting for things to shake out. Very high volatility today, at least this afternoon. Playing smart, playing smart. Look at that increasing selling volume. How does it play out? QQQ, got some red. XLF, a little bit of green. I will say any plays I post today, please proceed with caution. If you use my plays as bias or confirmation or whatever it is, just please play very smart. All right, here we go. He's talking.
Maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept interest rates near zero and updated its assessment of the progress that the economy has made toward the criteria specified in the committee's forward guidance for interest rates. In addition, in light of the strengthening labor market and elevated inflation pressures, we decided to speed up the reductions in our asset purchases. As I will explain, economic developments and changes in the outlook warrant this evolution of monetary policy, which will continue to provide appropriate support for the economy. Economic activity is on track to expand at a robust pace this year, reflecting progress on vaccinations and the reopening of the economy. Aggregate demand remains very strong, buoyed by fiscal and monetary policy support and the healthy financial positions of households and businesses. The rise in COVID cases in recent weeks, along with the emergence of the Omicron variant, pose risks to the outlook. Notwithstanding the effects of the virus and supply constraints, FOMC participants continue to foresee rapid growth. As shown in our summary of economic projections, the median projection for real GDP growth stands at 5.5% this year and 4% next year. Amid improving labor market conditions and very strong demand for workers, the economy has been making rapid progress toward maximum employment. Job gains have been solid in recent months, averaging 378,000 per month over the last 3 months. The unemployment rate has declined substantially, falling 0.6 of a percentage point since our last meeting and reaching 4.2% in November. The recent improvements in labor market conditions have narrowed the differences in employment across groups, especially for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor force participation showed a welcome rise in November, but remains subdued, in part reflecting the aging of the population and retirements. In addition, some who otherwise would be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. At the same time, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. How long the labor shortages will persist is unclear, particularly if additional waves of the virus occur. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate declining to 3.5% by the end of the year. Compared with the projections made in September, participants have revised their unemployment rate projections noticeably lower for this year and next. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated,
Yeah, no kidding.
exacerbated by waves of the virus. As a result, overall inflation is running well above our 2% longer run goal and will likely continue to do so well into next year. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, but thus far, wage growth has not been a major contributor to the elevated levels of inflation. We are attentive to the risks that persistent real wage growth in excess of productivity could put to upward pressure on inflation.
Like most forecasters, we continue to expect inflation to decline
to levels closer to our 2% longer run goal by the end of next year. The median inflation projection of FOMC participants falls from 5.3% this year to 2.6% next year. This trajectory is notably higher than projected in September.
There we go. Dismiss. All right.
We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials, like food.
There you go. I got a picture in there.
We are committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. We will be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee reaffirmed the 0 to 1/4% target range for the federal funds rate. We also updated our assessment of the progress the economy has made toward the criteria specified in our forward guidance for the federal funds rate. With inflation having exceeded 2% for some time, the committee expects it will be appropriate to maintain this target range until labor market conditions have reached levels consistent with the committee's assessments of maximum employment. All FOMC participants forecast that this remaining test will be met next year. The median projection for the appropriate level of the federal funds rate is 0.9% at the end of 2022, about a half percentage point higher than projected in September. Participants expect a gradual pace of policy firming, with the level of the federal funds rate generally near estimates of its longer run level by the end of 2024. Of course, these projections
do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. At today's meeting, the committee also decided to double the pace of reductions in its asset purchases. Beginning in mid-January, we will reduce the monthly pace of our net asset purchases by $20 billion for Treasury securities and $10 billion for agency mortgage-backed securities. If the economy evolves broadly as expected, similar reductions in the pace of net asset purchases will likely be appropriate each month, implying that increases in our securities holdings would cease by mid-March, a few months sooner than we anticipated in early November. We are phasing out our purchases more rapidly because with elevated inflation pressures and a rapidly strengthening labor market, the economy no longer needs increasing amounts of policy support. In addition, a quicker conclusion of our asset purchases will better position policy to address the full range of plausible economic outcomes. We remain prepared to adjust the pace of purchases if warranted by changes in the economic outlook. And even after our balance sheet stops expanding, our holdings of securities will continue to foster accommodative financial conditions. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to complete the recovery in employment and achieve our price stability goal. Thank you. I look forward to your questions.
Thank you, Mr. Chair. We'll go to Rachel from the Washington Post.
Thank you very much, Michelle, and thank you, Chair Powell, for taking our questions. The latest FOMC materials say that the FOMC thinks it will be appropriate to keep rates near zero until labor market conditions reach levels consistent with maximum employment, and there are also 3 rate hikes penciled in the projections for next year. In order to set up those hikes, what will maximum employment have to look like? When will you know that that threshold has been met, and how will that be communicated? Thank you.
So maximum employment, if you look at our statement of longer run goals and monetary policy strategy, maximum employment is something that we look at a broad range of indicators. And those would include, of course, things like the unemployment rate, the labor force participation rate, job openings, wages, flows in and out of the labor force and various parts of the labor force. We'd also tend to look broadly and inclusively at different demographic groups and not just at the headline and aggregate numbers. So that's a judgment for the committee to make. The committee will make a judgment that we've achieved labor market conditions consistent with maximum employment. When it makes that, it is admittedly a judgment call because it's a range of factors. Unlike inflation, where we have one number that sort of dominates, it's a broad range of things. So as I mentioned in my opening remarks, in my view, we are making rapid progress toward maximum employment, and you see that of course, in some of the factors that I mentioned.
Great, thank you. Steve at CNBC.
Thank you, Mr. Chairman. My question is, if it's often said that monetary policy has long and variable lags, how does continuing to buy assets now, even though it's at a slower pace, address the current inflation problem? Won't the impact of today's changes not really have any impact for 6 months or a year down the road on the current inflation problem? And aren't you actually lengthening that time by continuing to buy assets such that it could be not until the long and variable lag after you end purchases sometime in March that you'll start to have any impact on the inflation problem?
So on the first part of your question, which is why not stop purchasing now, I would just say this. We've learned that in dealing with balance sheet issues, we've learned that it's best to take a careful, sort of methodical approach to make adjustments. Markets can be sensitive to it, and we thought that this was a doubling of the speed. We're basically 2 meetings away now from finishing the taper, and we thought that was the appropriate way to go. So we announced it, and that's what will happen. The question of long and variable lags is an interesting one. That's Milton Friedman's famous statement, and I do think that in this world where where the global financial markets are connected together, financial conditions can change very quickly. And my own sense is that they get into financial conditions affect the economy fairly rapidly, longer than the traditional thought of a year or 18 months, shorter than that rather. But in addition, when we communicate about what we're going to do, the markets move immediately to that. So financial conditions are changing to reflect, the forecast that we made, and basically, which was I think fairly in line with what markets were expecting. But financial conditions don't wait to change until things actually happen. They change on the expectation of things happening. So I don't think it's a question of having to wait.
Can I just follow up in thinking about having to wait? Is it still the policy or the position of the committee that you will not raise rates until the taper is complete? Thank you.
Yes, the sense of that, of course, being that buying assets is adding accommodation and raising rates is removing accommodation. Since we're 2 meetings away from completing the taper, assuming things go as expected, I think if we wanted to lift off before then you would stop the taper potentially sooner. But it's not something I expect to happen. But I do not think it would be appropriate, and we don't find ourselves in a situation where we might have to raise rates while we're still purchasing assets.
Okay, let's go to Colby at the FT.
Thank you, Michelle. Chair Powell, I'm curious exactly how much distance you think there should be between the end of the taper and the first interest rate increase. Back in 2014, the guidance that was given was for the Fed funds rate to remain at the target level for a considerable time after the end of the asset purchase program. Is that an approach you support now, or does the current economic situation warrant something a bit different? Thank you.
So we haven't made any decision of that nature, and so no, I wouldn't say that's our position at all. We really haven't taken a position on that. I will say that we did talk today we had our first discussion about the balance sheet, for example, and we went through the sequence of events regarding the runoff and that sort of thing with the balance sheet last time. And I think people thought that was an interesting discussion. They thought that it was informative, but people pointed out that this is a significantly different economic situation that we have at the current time, and that the differences that we see now would tend to influence how we think about the balance sheet. And the same thing would be true about raising rates. I don't foresee that there would be that kind of very extended wait at this time. The economy is so much stronger. I was here at the Fed when we lifted off the last time, and the economy is so much stronger now. It's so much closer to full employment. Inflation is running well above target, and growth is well above potential. There wouldn't be the need for that kind of long delay. Having said that, we'll make this decision in coming meetings, and it's not a decision that the committee has really focused on yet.
Let's go to Nick at the Wall Street Journal.
Thank you. Nick Tamaros at the Wall Street Journal. Chair Powell, in March, you answered a question about maximum employment like this. You said 4% would be a nice unemployment rate to get to, but it'll take more than that to get to maximum employment. More recently, you have hinted at a possible distinction between the level of maximum employment that's achievable in the short run versus in the long run. Has your view of the level of maximum employment changed this year, and if so, how? And how close is the economy right now to your judgment of the short run level of maximum employment? Thank you.
Right. So the thing is, we're not going back to the same economy we had in February of 2020, and I think early on the sense was that's where we were headed. The post-pandemic labor market and the economy in general will be different, and the maximum level of employment that's consistent with price stability evolves over time within a business cycle and over a longer period, in part reflecting evolution of the factors that affect labor supply, including those related to the pandemic. So I would say, look, we're at 4.2% now, and the unemployment rate has been dropping very quickly. So we're already in the vicinity of 4%. The way in which the important metric that has been disappointing really has been labor force participation, of course, where we had widely thought, I had certainly thought that last fall, as unemployment insurance ran off, as vaccinations increased, as schools reopened, that we would see a significant surge, if you will, or at least a surge in labor force participation. So we've begun to see some improvement. We've certainly welcomed the 0.2 improvement that we got in the November report. But I do think that it feels likely now that the return to higher participation is going to take longer. And in fact, that's been the pattern in past cycles, that labor force participation has tended to recover in the wake of a strong recovery in unemployment, which is what we're getting right now. So it could well have been that this cycle was different because of the short nature of it and the very strong, the number of job openings, for example. You would have thought that would have pulled people back in. But really, it's the pandemic, it's a range of factors. But the reality is we don't have a strong labor force participation recovery yet, and we may not have it for some time. At the same time, we have to make policy now. And inflation is well above target, so this is something we need to take into account.
If I could follow up, you've talked recently about risk management, and so does that mean that the committee might feel compelled to raise interest rates before you're convinced that you've achieved the employment test in your forward guidance?
So this is not at all a decision that the committee has made, but you're really asking a question about how our framework works. And yes, there's a provision, what used to be called the balanced approach provision, that says in effect that
There we go. Now I'm back online on YouTube. Yeah. All right, so we got an hour and 10 minutes till the market closes. All right, look around here. Middle of 22 we'll be hitting 600. Yeah. So the bullish thesis continues until otherwise noted. 600, who knows? 500, probably. We're already holding 464. And now, sorry, go ahead. Yeah, I agree. That's what I'm looking at right now as we speak. I am looking at the options chain for some Friday plays to see if I can get some good premium before we get a real big crush on the VIX falling off a cliff. So let's take a look. PM contract, December 17th. What can we get out of these babies? Oh, 46.48, so the 45.50s are about 100. What can we get out of those? 790. That's some pretty decent credit. Nice, I like it. $4.10 for a 50 wide at 45.50 for Friday expiration. I'm from Uzbekistan. I lost $1,500. You lost that today? I mean, there's a reason why I haven't touched a trade today. So, yeah, I've decided to play it safe with all this craziness. All right, so green on tech starting to come up 389.69. SPY once again. Now we got this 464 to 465. So you got these $1 back and forth hits, $1.50 back and forth whammies. Holding R2. What happened with the market? I didn't understand this interview. Okay. Well, we had anticipation of a potential, or I guess fear of a potential rate hike coming on today because of what happened with CPI on Friday, and then the increasing concern for the supply chain issue and Omicron. So it's like, all right, or what happens with rate hikes? Well, nothing that was against the status quo, and that's the way we were talking about earlier. Is that as long as the market maintains status quo? By the way, look at this massive green candle, second biggest green candle since the initial one there. As long as the market holds status quo, or I'm sorry, as long as Jay Powell holds status quo, the market's going to be in a bullish sentiment because, all right, nothing's changed. The fear is gone. Let's go on and upwards as everything is fine. Well, that's exactly what happened. He didn't change anything, nothing that we didn't already expect. So here's the bullish action coming back in, and we had a 50-point rally in minutes. So yeah, I like to call it testing R3. You know, that's me. All right, red candle right there. Another rejection of R3. I am looking at December 17th PM contracts, the 4550, 4500, which you still at this point can get, what, $4 for it? I mean, that's the last time I checked. So, all right, red candle getting bought up. Look, tech forming new highs. VIX is starting to fall again back towards the pivot, and SPY's got some red. Man, it's wanting to punch. It's wanting to punch. We're about 5 minutes away from power hour. I forgot to do a J Powell poll, but here we'll do an end-of-day poll. Oh, there we go. Yeah, there you go. Yeah. Man. Wow. There's some sell orders up there. If you're playing this stuff on long positions, you're a bigger man than me, or woman, because this stuff is crazy, shaking, playing with fire. All right, so 46650, 46450, 46250. Where do you think SPY is going to close? Look at that pivot on the VIX, though. We got one bounce. Now we got another bounce. Let's see if it continues to hold. If it props through there, in fact, I'm going to go here, and I'm going to bring up a trifecta here. SPY on top. I'm going to put the Nasdaq in the middle, and I'm going to put the VIX on the bottom. Where did I put that at? Where did I put that line at? I put it at 2122. Right there. Alt. There. All right. All right, so now I got SPY on top. I got the Nasdaq in the middle, tech, and then monitoring the VIX here on the bottom. That's your setup. Nice, nice. Do I have a Twitter so we can follow? Yes, I do. Yes, I do. Thanks for asking. Let me get that for you. If you do want to follow me on Twitter, which I'm starting to use more and more, there's a link for that. All right, 2 minutes till power hour. Be careful. Gonna sip my coffee, enjoy the show. Money's not lost on positions. Hey, nice. Yeah, very nice. I know it's tempting to play this stuff with big moves, but man, you can get smoked out. You can get smoked out. Fed now to dial back the purchase and to make 3 rate hikes. Nope, they're not making rate hikes until the middle to end of 2022. After they finish tapering, which he said should be in 2 sessions. So, what, mid February, March-ish? 2 sessions, depending on when they have them. All right, watch this VIX. If I see this VIX start to break down here, I anticipate some upwards movement. 500 by Christmas, you know what? I've heard of crazier things. I've heard of crazier things. We still got, what, 2 weeks left in the year? All right, it's official. We are in power hour. 1 hour left in the market. 60 minutes. And another test looks like approaching of R3. If we have a break of R3, is that a buy? It depends, because we've already broken it once, as you can see, but I like to use the rubber band theory. So if we have a big buy that's not sold off, and we have a good follow-on buy candle. However, here's the thing. R3 is incredibly strong. I'm sorry, R4. That is the strongest of the resistance levels. All the resistance levels were pretty strong today relative to these S levels, but R4 is particularly strong. So if we do break above R3, do we continue to rage? What do I mean by saying power? The last hour of the day is just we call it power hour, and then the last 30 minutes of the day is dirty 30, because that's when things get a little hairy, a little dirty, because they start shaking and baking. Big old candles, $1, $2 candles, big moves that otherwise, if you aren't correct, will smoke your position. What time do spreads close for SPX? On the day of expiration, they close at 4 p.m. Eastern. All right, another green. I just closed a trade for $10 profit just to break an 8-trade losing streak. Hey, sometimes you need to see that green, man, or Mrs. Trader. Yeah, so there's nothing wrong with doing that. You know, it is about managing emotions. If you need to see a green number, take a green number, even if it is only $10. So there's nothing wrong with that for sure. Break that streak. All right, another test of R3. Watch it. Nasdaq's trying to break up highs too. VIX is starting to pop a low. This could be the major rally. Careful. Another rejection of R3. Yep, the sellers are still holding that R3 level hard, but if it keeps testing it, eventually it's going to eat up that sell order. So it either needs to reject, or if we keep poking it, especially with the VIX falling through the pivot, we could finally actually pop up to R4. And there we go. There's Nasdaq. So I expect some bull action here with this. Oh, there goes Nasdaq. Watch this. There it goes. There it goes. Boom. Look at that big buy up on Nasdaq. Wow. The Nasdaq is racing. All right, so VIX finally popped on through. The Nasdaq popped on through. 5 minutes into power hour. SPY is finally blasting up through the top. Right under R4. Now R4 is the stronger of the S's. I'm sorry, the R's. So let's see what happens right here. Continuation with the Nasdaq. Puts off R4? No, I wouldn't touch puts today. Nope. Nope, 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 nope. SPX trying to make an 80-point move or a 70-point move here in under an hour. So after coming down to 460.83, we're now 466.89. That's a $6 move. $6 move on SPY. Just absolutely going nuts. Testing R4. Anybody take that straddle, by the way? We were talking about straddles earlier. Anybody take that play? So VIX gapping down, Nasdaq holding this level, no red in sight. Let's watch the other sectors. $20.47 on the VIX, Nasdaq here, and SPY raging once again, trying to go for a $7 move in under an hour, or right at an hour. Nice, Aaron. Well done. Do you think it'll continue tomorrow and after tomorrow? Yeah, I do. I do think we're going to have a little more bullish action, possibly testing 47.10, 47.13, 15, where we kind of topped out on last week. So I do think, yeah, we are in store for some more bullish action here. What sign of weakness should I see for me to get out of these calls? Well, it depends how much you're up. You know, obviously, I wouldn't be greedy. I'd be taking some positions, taking some profits because we see how quickly things are moving and how aggressively things are moving. It can come down $2 or $3 just as fast as it went up. You just got to be very, very careful playing these positions. Yeah, no, it's 132% gain on yeah, awesome stuff. Not even a 0 DTE either. So great job on taking a nice healthy play and getting 132% off of it. No red in sight, though. The market keeps on chugging. Keeps on chugging. $400%. Nicely done. Nicely done. Some big gains on some plays. All right, so let's take a look here. Microsoft beasting here. Apple coming up 178.29. Amazon is green. Tesla is kind of get a little red here on the top of their range. Google. Nvidia is climbing. Facebook. Berkshire. JP Morgan. All right, let's look at the 15 to see a trend, any kind of trend. Massive green candles on the 15-minute. Slight diminish of buying volume. That's to be expected with that kind of huge rally. But now here we're sitting here right at R4. Yeah, especially on a move like this, because you don't know when the top's actually there. Look, that red candle bought up, hammered. This has that look of consolidating for another move up. It's not giving up an inch. And usually when we have that kind of action, it could move up here. So just be very careful if you're trying to time this. R4 is strong. There we go. Here's another move up. There's still 45 minutes left in this market. There's a lot of time. A lot can happen in 45 minutes. Look what just happened in the past hour. So trying to work on an 80-point move on SPX, an $8 move on SPY in an hour and a half. So a lot can happen in that amount of time. There we go, bouncing. We're just going back home. Yeah. Coming up to R5. Just keep on going. Keeps on going. Do I see IV being crushed on tomorrow's open? Yeah, I do. I do. I do see the VIX continue to fall, and I do anticipate that. Yep. Yeah. Yeah, definitely. The market is absolutely raging right now. Absolutely raging. Yep. So let's consider R6, especially this thing has just every candle is just no wick on top whatsoever, which is indicative of very, very strong bullish action, and we are just absolutely raging through the top. Look at that, another big red or big green candle with no wick on it, just getting eaten. VIX down here, 1985, still continue to fall. Tech is absolutely raging. Bam, still blasting through, approaching an $8 move in an hour, and absolutely continue to rage. Boom. Wow. Absolute rage fest. Nasdaq's raging. It just went, what, 500 points on the Nasdaq, now through R5, 468.70, and continuing to climb. All right, let's see here. QQQ's got 394.53. VIX just absolutely sold off from 2350 to 1996 and falling. Let's see what happens. What a silly move. What a silly move. Look at that big old candle right there on the 1 year chart. It just went from 460.89 all the way up to 468.93. Man, no red candles in sight. Just absolute straight green since 20 minutes ago. 22 minutes ago. Just absolute straight green. Yep. Yep. Just going to keep on going. Just going to smile at you and keep on going. Now it's consolidating for another move up. Let me do an R6. So I'll do an R8. Another hammer candle, increasing buying volume, and here we go. Another move up. Watch out for 470. Watch out for 471. We're about to make an $11 move in a single day. Let's see here. Let me see here. Man, there's so many resistances right here that it's just blowing through every one of them. It's like, how do you determine which one's the big one? All right. Let's see here. 46894. Still going. Look at that. Legging up for another run. Let's take a look here. Apple's 179 and climbing. Microsoft is there. Tesla. Absolute beast mode from 927 to 976 and climbing. Wow. So the market's going for a $10 move in an hour. This is the most ridiculous thing I've ever seen. Wow. Wow. So 469.54 QQQ is now beasting 395, and they went for an $11 move in an hour. So right here, we got 46925. No red candles in the past 30 minutes. Closing on the 3-minute chart. Everything's just buying, probably squeezing now, obviously. I mean, there's a lot of short people that are just absolutely covering everything. And it's just causing everything just to fly higher and higher and higher. There's the 15-minute, there's a 5. Even on the 15-minute, the buying volume is still incredibly high. Well up 456.71. Yeah, yeah. This is probably the most ridiculous move I've ever seen on SPY in a single day. Outside of a Corona catalyst. Just going from 460 to that just $9 move in just a matter of an hour and a half is just silly. It's just silly. Yeah, yeah. And still going. It's still getting bought. So no red candles at all. And this one probably will close green here in a couple of minutes. All right, let's see here. VIX all the way down to 19, back under 20. Wow. Next pivot for the VIX is probably 1869. First red candle. Let's see if it closes red. So the bonds have a little bit of green action here, 149.42. A little bit of red, 468.85. Yep, bought up. No weakness in sight. Let's see, Nasdaq here. The bonds now, a little bit of, red sell with the bonds now, so still going. I wouldn't be surprised if this thing finished over 4,700. Already 46.95. Already popped, 46 right at 4,700 after coming down to 46.14. Something a 100-point move on you in the last hour of the day. Alrighty. 30 minutes left. Approaching the dirty 30. The dirty 30. All right, looking up for yet another move. So only one red candle in the past 35 minutes on the 3-minute chart, and now this one's even buying up and heading higher. About to form new highs. VIX is still falling, 1951. There it is. Boom. Look at that. Another leg up. Going. Going for a $10 move in an hour and a half. That's awesome. Man, this is stuff. Man, this is the stuff that we need to really appreciate, because this is we're not going to see this for that all that long. This is massive, incredible, record-breaking moves. It's just crazy. It's just crazy. $10 moves on SPY, yearly. We're doing a year's worth of change in 2018 in 1 hour. Just bring that into perspective. $7 was our overall move in 2018, and we just did $10 in 1 hour on SPY. Will theta play still be prevalent the next 2 days? Yeah, absolutely. Absolutely. Until the VIX starts really hitting the lower 11, 12, 13s, they're still prevalent for sure. Yeah. Yeah, definitely. I would agree. I would agree too. Probably, anywhere from 46, 47.10, 47.20, I would probably say at least we're going to have a gap up. Yeah, there is no selling pressure whatsoever. Like even on the candles, they're all getting bought and just continue to higher. Just incredible buying resistance and buying volume. Moving higher, 469.56. All right. Apple's got a little red here, a little bit of red. Amazon there. Crazy stuff. Crazy stuff. $27 minutes left in the market. I'm going to go ahead and call that an afternoon. There's 30 minutes left in the day. I don't anticipate taking any trades today. It's just too crazy of action. Unexpected, record-breaking stuff once again out of the market. But I guess the unexpected is starting to become expected the way this stuff is. So soak it all up. Soak it all up because this is insane stuff. I'll see you all bright and early if you're on the Discord for the stream, the voice stream tomorrow morning for Market Open. Be ready for more opportunity to make some money. Learn a little something along the way as well. Thank y'all for being here. I appreciate it for the second stream. Watching some crazy Chair Powell action. Let's see where the day closes for the next 25 minutes. I'll see y'all tomorrow bright and early. Y'all be safe. Enjoy the rest of the evening. I'm out. See you. You as well. Thank you.